Alright, hi guys, welcome back to PKFX YouTube trading channel. So this will be the usual trade recap and lessons learned. This will be from trade number 31 up to 45. If you have not watched lessons learned from trade number 1 to 15 and 16 to 30, please go and check out those videos, because I believe as we are tracking, as we are tracking every single trade that we are taking and journaling them and reviewing them batch by batch, eventually over time we'll be able to identify the similar patterns where we keep losing and the similar patterns where we keep winning. And then slowly, upon reaching 100 trades and beyond, we get to learn from the mistakes and try not to repeat those mistakes, and learn from the wins as well and try to repeat the wins as well, and slowly move towards a profitable trading edge that we can build over time. So going straight to this set of trades, to be fair, there has been quite a bit of losses in this particular batch. In fact, if I check over here, I had only 2 wins and 1 break even and about 12 losses, which is definitely not good. I've taken quite a bit of hit this particular few weeks, and some of it was news induced, some of it the market just essentially reversed back on me, and because I committed on the trade, I continued to hold the trade and I took the loss. But regardless, I'm gonna go through and try to see my mistakes and try to see if there's room for improvement for me, one by one. So maybe this can also help you if you're looking at it, to avoid this sort of mistakes in the future. It's always better to learn from another person's mistake rather than making mistake by yourself and trying to learn from your own mistakes. You can also learn from another person's mistake and remember those mistakes so that you don't repeat those mistakes, to expedite the learning process. So yeah, I'll go straight to the first trade, which is trade number 31, AUD CHF. So I've documented this particular trade. In fact, this is the screenshot for the trade, what actually happened. So just to go through very quickly, I was only risking 0.5% for this particular trade. The trade reason: the weekly candle is stalling out and creating a weekly rejection around the weekly area of interest, to act as resistance with quite a distance to run down to the weekly EMA. The daily is a sell. The 4-hour candle closed below the area of interest, and I entered upon pullback with the 30 minutes still strong sell. So what I'm saying is, essentially, this actually broke below, and when it came back up and then curved back down, on this pullback is where I entered, expecting the market to go further down. But obviously the market after that continued to range and eventually broke to the upside and hit my stop loss, right? So that was the loss over here. So what can go wrong? I did mention that this is a counter trend trade, as weekly is a buy, current 4-hour is still a buy. So stop loss is slightly above area of interest. If 4-hour maintains as buy, it can wick me out. Need to have the 4-hour to turn into a sell to go to my take profit. Now, if I were to look at the particular chart, so if I go to AUD CHF on a weekly candle, this is essentially what I was trying to do. I saw that the market did rally all the way up and started eventually curving down. So it was a good trade, right? And I was expecting the market to push all the way down, right? Because the weekly EMA is far down here. So that was the logic thought process behind it, which was good, right? Because this was essentially curving up. What I did not expect is the wick out over here. So if I go to the daily for this particular candlestick pattern over here, and I can see that for the daily EMA continued to hold as a support throughout, right? It did curve below, but it didn't break below the EMA. And eventually the market literally ranged on the daily candles and broke towards the upside. In fact, this particular loss was actually a wick out. So I got wicked out and the market still went back down. Now, of course, the market, I entered back another trade after that, but that's for the later case. This sort of wick out is kind of something that we need to avoid. So I gave 39 pips. If I were to give about 50 pips, probably I would have still been in the trade. But it is what it is. At that point of time, at that point of entry, I thought I was putting the stop loss with quite a bit of a gap over here above this box. But looks like it was not sufficient, and I still pretty much got a, they call it liquidity grab, right? So I still got wicked out. So it is what it is. That is this particular trade where I got stopped out. Now going back, I mentioned over here, um, the market did not do the anticipated move. In fact, the market was technically ranging sideways ever since entry in the same area in the 4-hour chart, shifting from buy to sell to buy to sell. So that's technically ranging, right? If I look at the market, yeah, it was basically ranging from a buy to a sell, buy to a sell. It was choppy, right? And finally decided to break upwards and hit my stop loss. Also, the swap for holding for so many days accumulated quite significantly as well. So I did lose quite a bit because I was holding almost 12 days for this particular trade. Ideally, I expect the trade to conclude within 2 to 3 days, but 12 days was pretty long for me, for my style of trading. So I need to avoid this sort of trades. And the best way to do is, if you notice that the market is ranging, we shouldn't enter, right? At this point of time, I didn't notice the market was ranging. I only realized when it was already halfway through over here that the market is actually just ranging, right? This looked very promising when it broke below, but eventually it started ranging. So it can happen. I would say this is a loss taken, no issues. I move on to the next trade, right? Okay, so next trade is AUD JPY, and this trade, I think it was a straightforward loss. I mentioned clearly here, this is a counter trend trade. Daily and 4-hour clear sell, following up with a clear break above the area of interest and a retest from below in the 4-hour chart. All lower time frame shift of structure as well to sell. So this was the loss that I took. It did break below and it did came back to retest above, but upon entry, the market did not go below. It literally just shoot up all the way towards the upside, and I see that the market continued to rally all the way up. So this already also broke my box over here. So I was definitely not accurate in terms of the direction, because JPY pairs has been rallying towards the upside. So I would say this is a straightforward loss. So over here, I did mention here what can go wrong. JPY pairs have been gradually rallying upwards, so this can be eventually hit my stop loss, as my stop loss placement is above the 4-hour lower high, but still inside the area of interest for a proper 1 to 2 risk to reward, right? So weekly is still a buy. Just that I see last 4 weeks have been struggling at this resistance area, so I decided to go for a counter trend trade sell. Unfortunately, market shifted back in the lower time frames, back to buy, and shifted the 4-hour to buy as well, and went straight to sell. So that's essentially what happened. I was hoping for this. Market did not give a damn. It literally just flew towards the upside and hit my stop loss. Now, even if I placed the stop loss slightly higher, I would have got stopped out anyway. I was completely wrong in terms of the direction. So this is loss well taken. Now, moving on to the third trade, trade number 33, AUD CHF. Now, for this particular trade, is this trade. So it's essentially the repetition of the previous trade. I did see a good break below. See, the 4-hour did shift bearish, and I saw a potential to break below as well. And I entered. It was a good entry, came back to retest and rallied back down as well, but never really went to my TP. In fact, this area started holding strong, which eventually made me to create a new daily zone over here. Eventually it bounced and rallied towards the upside, and again I pretty much got wicked out. Well, in this case, I would say it is still a wick out. If I were to put this stop loss slightly higher to about probably 60 pips, I would have still been in the trade. But yeah, I tried to make the risk to reward make sense, but eventually the market did go back down again, yet still did not hit my take profit. So I wouldn't say this was a good trade. I would just say this just similar pattern repeating once again over here. If I go to weekly for this particular currency pair, AUD CHF, just to zoom in and see what really made me to enter here, is because I saw this particular trade once again after taking the hit. It created indecision candle, and I was still hoping the market to rally towards the downside, right? I was hoping the market to go towards the downside, but it went straight up again. So I took another loss over here. In fact, the way I documented this, I mentioned here, risked 1% for this trade, but I was calm. Technically, it's the same trade that I got wicked out previously after holding for so long. So, end up the weekly candle formed another strong rejection doji and closed below the area of interest in my favor. So, over here, it did close as a rejection doji. This particular candle did close as a rejection doji and was below this area, making it as a resistance. So any sort of a pullback, I thought, hey, it's a good entry, right? So it was a good entry. However, if I go back to the 4-hour candles over here, yeah, I pretty much got stopped out because eventually the market did the same ranging and broke towards the upside as well. It was pretty much really an indecision, right? So I mentioned here what can go wrong. This is a counter trend trade, as weekly is still a buy. Daily EMA is coming up as well. This market ranged, the results, this market ranged far too long, and the daily EMA could never be broken despite multiple attempts, and finally acted as support, and trade went to my stop loss again. Same pattern repeated twice. Most painful is the swap fee itself is about 25% on top of the stop loss amount for holding this trade for 9 days plus. It's a decent loss, right? I was holding this for almost 9 days plus, and the previous trade for like 12 days, and I lost a lot of swap fees over there. So over here, I mentioned over here that the swap fees as well I calculated, and it was close to about 25% of the total amount. So whatever that you risk, remember that you will also lose a lot of money for the swap fees if the swap fees is negative, right? So have to be careful over that. And yeah, that's one good lesson learned that I can take over here. I entered the trade because the confluences met. It's not that I'm relating it to the previous trade. I'm not relating it to the previous trade, but I can see a lot of similarities in the previous trade and this trade. So these are losses accepted. And I'll move to the next particular trade. So trade number 34, USD CAD. This was a win. The emotion, I was calm as I was risking only 0.5%. Trade reason, all time frames clear uptrend, 30 minutes clear shift of structure. 4-hour broke above the area of interest and came back to retest area of interest and round psychological number and moving upwards, having 4-hour and 2-hour EMA as a nice support. So this was the trade, and this is something that I gotta focus. What I see here in the 4-hour candle, right? We can see a clear uptrend pattern all the way up, and any sort of pullback kind of looks like a good decent buy opportunities, right? So this is the kind of pattern I gotta start focusing more, looking for more, because I think riding with the trend is essentially giving me more profits. This was a good win. Nothing much to talk about over here. All I could say is this is the kind of pattern I'm going to start looking forward to in the upcoming trades that I'm going to take. If I see a pattern continuously rallying towards the upside, then I'm going to continue to bet that it's going to continue to rally to the upside. If I get wicked out, I get wicked out. It is what it is. It is still better than holding a trade that is ranging for 9 to 12 days and hitting my stop loss with a big amount of swap, and I'm losing money, right? I'm actually losing money. So I rather focus on this sort of trades. I'm going to start hunting for this sort of trades, and if it hits my take profit, I'm just going to move my my stop loss into my take profit area and try to continue to hold. This trade I did not hold, but I believe this is what I should be doing. I'm going to try to focus more on this sort of trades. So very quickly, what I mentioned over here, market had a strong push towards the upside. Also, I see this was during Kevin Walsh's FOMC press conference. Closed at a 1 to 2 risk to reward because I thought that particular push was because of the press conference, right? Could have held longer, but stick with the plan as market coming close to weekly area of interest. Continue to monitor for any strong pullback for potential entry. Overall, it was a good trade, but I traded with the trend at its high point. So I was trading at a high point, and I believe the push was because of the press conference, and hence I closed the trade. Ideally, I believe I should have continued to hold, even though it was coming towards the weekly area of interest, which is this particular zone. I should have just moved my stop loss over here and call it take profit, but try to bet see if the market is going to continue to rally. Of course, the market can always beat me back down and get me out of the trade and continue to rally. But if I was lucky, it would continue to go up. In fact, let's go and see USD CAD, this particular trade, where it is. Yeah, okay. So this is USD CAD 4 hour. So this was the trade, right? And yeah, the market continued to rally upwards, right? And yeah, this could have been easily a 1 to 5, 1 to 5.5, let's say 1 to 5. It could have easily been a 1 to 5 risk to reward trade. I mean, of course, could have, would have, should have, what if, and all that stuff, right? I could have been stopped out at any point of time, but I believe this sort of continuation pattern is what I should aim. Maybe I would have been stopped out in this pullback or in this pullback or in this pullback, but I should start focusing more on letting the winners run and see if I can maximize the trade. Now, of course, obviously the market is now coming back towards the downside. Um, any trade that I want to enter, I got to reanalyze everything and see if the confluence meet before I enter. But yeah, this was a good trade. So moving on to the next trade, that would be AUD JPY. So trade number 35, AUD JPY. So for this particular trade, okay, so let's see what I've journaled for this particular trade, AUD JPY. So I mentioned here, last week created a weekly rejection doji candle on the daily area of interest. Expectation is to have a push to the upside, holding the daily area of interest as support. Also, previous daily area of interest closed above the daily area of interest, holding this area as a base. So if I were to look at the chart over here, I drawn a box to highlight this particular zone that I mentioned. So yeah, I pretty much did have a weekly candle pushing towards the downside, and then I had a weekly doji candle that is generated over here, right in the middle of the daily area of interest zone, this particular box that I draw. And my expectation was the market to continue to push towards the upside, which it did a little bit, but eventually it just dumped the following week. Like it literally just dumped the following week. If I were to zoom in on the 4 hour candlesticks, I can see that this was the pair, okay, over here. So this was the pair, and this was the actual part where that happened. So I can say that, yeah, I was completely wrong and the market completely dumped on me. Lucky I had my stop loss in place. So that is one of the reasons why we gotta always place a hard stop loss, not some mental stop loss where you think that you're gonna exit over here or here or here, because eventually you will drag it back down. So this is from lessons learned of losing a lot of money, that a hard stop loss is mandatory regardless of whatever that happens, whatever that the market shows, right? But we don't need to put a take profit, but we definitely got to put a stop loss. The reason I don't put take profit is because if the market continues to rally towards the upside, instead of a 1 to 2, I leave it to an opportunity to hit 1 to 3, 1 to 4 if that were to happen. But for stop loss, it has to be a hard one for me. So yeah, let me just remove this particular box. But this was the area where that happened. Eventually, it's a decent loss taken because it was a good strategy to buy after the doji candle. Let me see what I wrote over here. I said that this is a counter trend trade with a weekly and daily sell, but 4 hour onwards, all the lower time frame were indicating buy. So 4 hour onwards, all the time frame was indicating buy. Hence why I was thinking it's going to go to that direction, right? So unfortunately, it dumped towards the downside. It is what it is. I marked over here, the market was in buy mode and headed halfway through, but lower time frames shifted bearish and 4 hour became sell. Market now became weekly, daily, 4 hours all became sell. Market broke below the EMA and broke below the round psychological number and the area of interest and hit my stop loss. This is one of the risks of holding a counter trend trade. In fact, I'm thinking about starting to track all these trades, whether I'm taking a pro trend trade or I'm taking a counter trend trade, to eventually understand in the total number of trades that I'm taking, how many of are actually pro trends, how many of it are actually counter trend, and out of the pro trend trades, how much am I actually winning, how many percentage am I winning, counter trend trade, how many percentage am I winning, to ideally understand if I should keep taking counter trend trades or I should just focus on pro trend trades. But in order to do that, I gotta modify a little bit more this journal, which I would do in the upcoming near future, to have more data, right? To be able to collect more data. As I said, right now we are still in the data collecting and modifying and upgrading the journal kind of phase. Once we already hit the 100 trades, and then we can really tweak here and there to try to make it a profitable edge, right? So it is what it is. I'll move on to the next particular trade, trade number 36, which is AUD USD. Now for this particular, okay, over here for this trade AUD USD, I mentioned here weekly buy and 4-hour buy, waited for 30 minutes to shift to a buy, and saw clear inverse head and shoulders in 30 minutes, breaking and closing above the EMA. Also, the 4-hour has broken above the area of interest and came back again to retest the area of interest. And when the 4-hour shifted bullish, had reasonable pullback, and I entered upon strong push back to the upside. Stop loss placement below area of interest. So looks like it's a good trade, where I mentioned that the 4-hour candle did break above, came back below to retest and pushed above. So I entered over here. Unfortunately, the market literally broke towards the downside. And if I look back at this particular trade AUD USD over here, it actually read it all the way down. I was completely wrong in terms of the direction, and that's completely fine, right? So that is exactly what I want. I don't want to get wicked out. I want to be completely wrong in terms of the direction, and it's a decent loss taken. So I don't want to analyze too much of this particular trade because it is what it is. I mentioned over here, what can go wrong? Current candle at entry is still within the area of interest region. Also, if zoom out, daily is bearish and might have head and shoulder structure potentially playing out that can hit the stop loss. So if I were to go back to check the day, this is AUD USD on the daily pattern, I can see that this was the shoulder, head, shoulder, and a break, right? And a retest and a continuation trend towards the downside, right? And it eventually broke towards the downside as well, right? So that played out, and yeah, I guess that did play out, right? So the results, as we can see, that did play out, and I lost the amount. I mentioned over here that this particular trade, 30 minutes shifted back into a sell, just few hours upon entry, and remained sell and hit my stop loss. The daily bigger time frame, head and shoulder, played out to the downside, right? So when you have a 30 minutes inverse head and shoulder pointing towards the upside, but you have a daily head and shoulder pointing towards the downside, obviously the daily, which is the bigger time frame, is gonna eventually play out, right? So that is one of the lessons learned. Also, I mentioned over here, lesson learned, when you can identify equal things that can also go wrong, for our EMA, daily head and shoulders, all this was in the opposite direction, right? If I were to look, the 4-hour EMA is coming as a resistance for me. I need to break it before I go towards the upside, right? So when all of this is coming towards the opposite, making the trade as a 50-50, prefer not to take the trade because it killed your edge, even when confluences show that it's a A-grade setup. So protecting capital is more important than losing a small amount. Can be used to deploy into a better trade later. So this is one loss that I'm taking it, and I'm telling myself that, hey, if you have an edge and it's showing that it's an A+ setup, but at the same time you can also identify certain things that is telling you that maybe it's going to go in the opposite direction as well, probably your edge is not going to play out. Probably it's becoming back into a 50-50 trade, and if that's the case, look for a better trade. Look for a trade that has a clear uptrend or a clear downtrend. So yeah, that is a very good lesson learned. Now moving on to the next trade, GBP USD. This particular trade, I closed it back into a break even. So very quickly, without wasting time, I can just go to the chart over here, GBP USD daily chart, and this was the trade over here. And as we can see, I closed it on a break even upon the pullback. The market did go all the way to about 1 to 1.8, right? It did not hit my take profit region, but eventually what happened is, if I look at the screenshot here, yeah, the market pretty much reversed at this point of time, right? It did go to my direction. It did go into my direction. I was hoping it to hit the take profit region. However, the market did bounce back and broke back the 4-hour sell, changing it into a 4-hour buy. And I said, you know what, I'm closing this. Even though there were some small profits, if I consider the swap fees and every other things that was happening to my account, so I said, you know what, I'm just going to call this particular trade not as a win but as a break even. And I closed it, and I'm glad that I did that, because if I look back at the chart over here, that was indeed the reversal point. The market continued to rally towards the upside after that. So it was a good close, because if it's not, it would have taken my stop loss, and I am completely wrong. It did not hit my take profit, it went to the opposite direction. So this kind of losses where I close into a break even, I'm happy because I'm protecting my capital here. So that was GBP USD. Moving on to trade number 38, AUD USD. So this particular trade, I journaled it as such. I mentioned a trade reason. Market made a clear move down day before, and daily and 4-hour is a clear sell. 4-hour has been holding below the area of interest box as resistance. Expectation is to continue to move downwards, and let's see what happened over here. Well, it has been moving down. It did break below this box, and then it came back slightly up, and I entered with an expectation that it's going to continue to go towards the downside, right? But what the market did was it pushed towards the downside and then broke above, changing it back into a 30 minutes buy, breaking it below again, changing it into a 30-minute sell, breaking it above again, making it into a 30 minutes buy, and eventually rallying towards the upside. In fact, I think this was too much of a risk that I took, because the stop loss is super tight. It's not even covering this particular box over here, right, in order to make the trade make sense. But if I zoom out and see later on what happened, the market never really did hit my take profit, and the market eventually did go down but rallied upwards and broke above this zone, this area of interest, and continued to go towards the upside. So I was once again completely wrong in terms of the direction of the market. The market did rally towards the upside later on, breaking this particular zone, right? And the stop loss was pretty tight. It was just 20 pips. So I have documented over here. Upon entry, market shifted back to 30 minutes buy, broke both above the round psychological number and the EMA, hit stop loss easily as the New York session opened with volume, as the stop loss is only 20 pips and inside the area of interest. So one of a good lesson learned that I put over here is that setting 20 pips stop loss just to catch the trade when it's not even covering majority of the area of interest zone is simply not ideal for swing trading. This is more towards day trading or scalping. So maybe reconsider to be neutral and look for better opportunity instead of taking such losses, and it's actually not worth it. This is what I documented over here. Yeah, we can take trades with 20 pip stop loss if it's going to cover a good amount of the area of interest or the box or the zone that I'm expecting to act as a resistance for this sell. So that means it should cover this area and slightly above, right? And in this case, that should have been 55 pips. But of course, if I do that, the risk to reward will not make sense. Hence, I took the risk and went for 1 to 2 with 20 pips. But even that, trying to hit 40 pips take profit, it did not happen, right? I took the stop loss. So it is what it is. Loss taken, and I'll move on to the next trade. Now, this one, Euro USD, which I opened in Asia session. I noticed that I've been taking more losses when it's Asia session. However, right now, because it's data gathering, I need more data, so I keep taking whenever the opportunity presents itself. This was actually an A+ setup with majority of my confluences aligning. However, I still took a loss. So over here, let me see what I recorded over here for this particular trade. So here I mentioned I risked 1% for this trade, and I was calm because I had a very good confluences as per my strategy, and it said that it was a A+ setup. So that's the reason in why I risked 1% for this trade. The trade reason, the weekly, daily, 4-hour, 2-hour, 1-hour, 30 minutes, all was pretty much sell. I had a strong push to the downside. The 4-hour broke below the area of interest, came back and rejected the 4-hour EMA with a strong engulfing candle and closed again below the area of interest. the round psychological number was acting as a resistance as well. So this is what happened, right? It pushed below, came back again, and then rejected with a strong engulfing candle. And the next few hours, it was all forming below here. So I was expecting a continuation push towards the downside. But what happened is the market rallied upwards, got rejected again on the 4-hour EMA, rallied back upwards. Third attempt, rejected again on the EMA, and the fourth attempt, it broke it and it rallied upwards, right? So one of the things that I noticed after like really studying this particular chart, if I go to the 1-hour candlestick, the 1-hour EMA was essentially acting as a support. And when I entered, right, it had a strong push towards the upside. So this I wouldn't say as a good entry, even though I had very strong confluence. Market was not pushing towards the downside. The market was pushing towards the upside on the 1-hour candle, indicating that the lower time frames are slowly shifting, right? Of course, the market did range thereafter before hitting towards the upside, but this is something I need to avoid as well. I need the market to be pointing towards the downside, not pointing towards the upside for a sell, right? So even though this trade I took a loss, I documented in such a way, I mentioned here clearly, upon entry, market moved to the upside already and has been struggling to break below again. 4-hour chart was forming a head and shoulder kind of pattern and finally broke down. But while retesting the neckline, end up being a fake out and market shoot to the upside. So I was essentially talking about this pattern that looks like a head and shoulders pattern and retest neckline kind of thing that eventually broke towards the upside. To be fair, it's not really a good head and shoulders. This head is supposed to be higher than both the shoulders, so I wouldn't really count it. It looks like a head and shoulder, but it's really not a head and shoulder, right? So yeah, so it broke pretty much the round psychological number, the EMA, the area of interest. It literally broke everything, right? And this is one of the strongest lessons learned that we gotta learn over here. The round psychological number, the EMA, the zone of support and resistance, these are the things that we are essentially drawing into the charts and expecting the market to obey that. The market has no clue at all that this is where my area of interest is, this is where I'm drawing my zone of support or resistance. The market purely moves based on price action and liquidity and volatility, right? So it has no clue with regards to what am I drawing over here. The reason we are drawing all these charts and patterns, these lines, these boxes, is for us to have some sort of a calculated move to make the trade make sense, right? But yeah, I understand that the market doesn't have to care about any of this. It can easily break, and this is a proof that it can be an A plus setup, and if the market wants to straight up hit your stop loss, it will, right? So I also cross-checked with news, and there was Euro news and non-farm employment change and FOMC member speak that was going on, right? So it was also news-driven. It is not at all in my hands, right? On which I was not even following up as well. So may have been the reason for the sudden volatility. The lesson learned over here: A plus setup can fail as well. So this is the key, the most important thing. If I were to take away out of all these losses, I would say this is the main thing. A plus setup can fail as well. All time frame can align and still fail as well. Always zoom out to see market position, to see if you are asking way too much of a move in a bigger time frame within that week itself. So the best thing to do, I realized that zoom out, check on the weekly and see, does it make sense for a weekly candle to print in such a way, right? So these are things that I can start doing in my future trades. I can apply them in my future trades. And just because it's an A plus setup does not mean that I gotta suddenly go all out, right? I mean, I gotta be disciplined enough to identify an A plus setup and go for it, but I gotta be clear or level-headed, knowing that the risk is still there. It can always hit my stop loss. So yeah, that was Euro USD. Now moving on to my next trade, which is gold. Now this is an unfortunate loss. This particular trade, let me bring back the graph. So yeah, this was the gold trade, 4-hour candlesticks, and we can clearly see over here the market did hit my take profit. Unfortunately, I was asleep, and when I woke up, the market already wicked up over here, and it was pushing towards the downside again. So I thought, you know what, it's going to hit my take profit anyway, continue to hold. And after that, the market actually rallied all the way up, and I almost got stopped out. And I was like, shit, this was a 1 to 2 winning trade, and now it's going to lose. You know what? I already committed to this particular trade. If it hits my stop loss, it is what it is, and I let it be. And guess what happened? The market continued to rally towards the downside once again. In fact, it did hit my stop loss. Sorry, it did hit my take profit, but I did not close the trade. So this one is purely on me. I did not close the trade. Even when this candle printed, I did not close the trade, thinking that the next push is going to be towards the downside. It's going to fill this week. I continued to hold. I thought once the market breaks below over here, I could move my stop loss into take profit and try to continue to catch this particular rally. So it was a risky evaluation. What I did not foresee is this huge pullback thereafter that hit my stop loss. So what was supposed to be a winning trade for XAU USD was, it did end up as a losing trade. So I take this on me. I have no one else to blame but me. Over here, I did, update this honestly, as honest as I could. I mentioned my emotion. I risked only 1% for this trade. I was calm. Trade reason: the weekly, daily, 4-hour, 2-hour, 1-hour, 30 minutes, everything aligned for a sell. The 4-hour broke below the area of interest, made a nice pullback, and then curved back to a sell with an evening star formation pattern, and shifted the 30 minutes 1 hour into a sell. This was my entry point. So where was this? This was so it broke below, came back up again, made that evening star formation, and started going towards the downside. And I said, you know what, this is a beautiful curvature, right? It's going to push towards the downside. And hell yeah, I was correct about the direction, but I did not close the trade, right? So this was my entry point. And what can go wrong? I mentioned the evening star pattern was formed slightly above my area of interest. Can also indicate it's now breaking above and retesting the area of interest from above. So need to be careful here. Stop loss placement is also within the area of interest, so I can be wicked out but still be right about the direction. Now, about the stop loss, I'm still working on this particular thing. I'm only risking maximum 1% per trade, and that's why my stop loss over here is up to 35 pips or 3,500 pips, you want to call it, for gold or whatever. But ideally, the stop loss should be above this particular zone, above this area of interest, at a reasonable amount, where if the market moves completely the opposite direction, I'm completely wrong, right? But I did not want to risk more than 1%, hence this is what it is. As I keep growing my account, as I keep topping up my account, more and more trades in the future, this amount, the 1%, will also increase. So I've already topped up another $500, making the account size to become 4,000 now for the upcoming trades. So this I can also scale up now from 35 to 40. I don't want to risk more than 1%, as I'm just collecting data right now. But ideally, again, we need to have a stop loss that will make sense, not a stop loss that is somewhere still within the area where I can be wicked out and then the market continue to move towards my direction, right? So that was goal. And at the end, I did mention the results. The market did go to my take profit. When I woke up next morning, it wicked at take profit on the 4-hour candle. Market then rallied back and almost hit my stop loss. I decided to continue to hold, as I have already committed to the trade, right? So set and forget, right? Market again came back down and hit my take profit, creating a new 4-hour lower low. This was a perfect trade, but I did not close the trade or move the stop loss to take profit to secure the profits. I was expecting the market to continue to rally lower, creating a new lower high and a new lower low. Moving the stop loss to take profit area will make it hit, and then I could not continue with this particular. So yeah, if I do that, right, if I put my stop loss over here, right, and it wigged me out again, my take profit will be hit, right, because of the stop loss placement at the take profit. And if the market continued to rally downwards, I cannot catch the winning trade, right? So that's why I didn't move that. I wanted to continue to hold a winning trade. But after the London Open, volume kicked in and the market reversed. And when New York opened and volume kicked in, market completely reversed and went straight to stop loss. Checked on the news later, it was also the Fed chairman, Kevin Walsh was speaking at that time. Unexpected, as I was not following this. So lesson learned. Honestly, when price reached take profit, there was a little greed involved as I was up 2% and wanted more. I should have taken the profits, understanding that 4,000 round psychological number is very strong whole number and being below may not be safe. This 1% loss is purely me. I need to do better. So this is like super honest, brutal journaling where I take the complete blame. It's just me. This 4,000 should have acted as a very strong support level, and that's why I can see time and time again whenever it's trying to break below, it's just getting pushed towards the upside. Knowing this, I should have closed. I did not close. It's purely on me, right? So loss taken, and moving on to the next trade, which is USD CHF. So okay, so this particular trade, I can just pretty much show what happened. Uh, it was weekly head and shoulders pattern that was pretty much at the high point, right? And a pullback over here. I thought the market was going to continue to rally upwards. The neckline has not formed yet, and I entered, and yeah, the neckline decided to form, and I took the hit. And if I were to zoom in on the weekly graph, this is the weekly USD CHF on a weekly, and we can see this was the shoulder, head, and shoulder, and a break above, right? And I entered here thinking that it's going to continue to rally strongly. It decided to make that pullback and form the neckline to retest the neckline, and that's it. I got stopped out, and that's pretty much it. That's what I expected to happen if I was wrong. I mentioned here clearly, weekly head and shoulder. If decided to pull back to form neckline, my stop loss will be hit, and that's exactly what it did. Right, the stop loss got hit. Right, so the lower time frame breakout above the area of interest, 30 minutes, 1 hour, 2 hour, was not a strong one. That should have indicated it's a fake out. In future trades, let it clearly break above or below the area of interest, and then pull back and then curve back to the direction before entering the trade. Look for more confirmation. Checked news, and there was CHF CPI news. There was data release as well. That may have caused the volatility as well. But yeah, I didn't wait for it to clearly break above and then come back and retest below, because I thought market was going to continue to rally towards the upside. I took this particular area as a good break above and a pullback, and I entered. That was not sufficient, right? Because last thing that I know, that this box could have been drawn up to here, up to this area as well. This is a decent breakout, right? But I need to understand that market did break below as well, and again below as well. So maybe it just broke below and came back to retest to confirm the break below, right? So it's very subjective, but what I can say is I was pretty much buying at a high point. If I look at the weekly candle, betting that's going to continue to go up. Market did make its pullback, and then the weekly EMA is now curving up. Market pushed back up again, but this week it's forming another doji. So let's see what the market has to do. Maybe this might end up being a fake out as well. So I don't want to rush into the upcoming trades. And I'll move to the next one. This is AUD CHF. Now, for this particular trade, I would say, yeah, rather than reading this, I can just look at the charts over here. It was pretty sad. Again, after this long, lengthy trades that eventually got wicked out again, the market finally broke below, right? And then when it made the pullback and the daily EMA was coming in as a support, I saw this as a potential opportunity for a continuation trend towards the downside. What the market did upon entry, it just created, if I were to zoom in, it just created multiple indecision candle above the daily EMA, closing above the daily EMA, and eventually rallying up and hit my stop loss once again, right? So this was the third loss. And if I were to zoom out on the weekly candle, eventually what the market did was create indecision doji candle below this daily area of interest, and the next candle reversed towards the upside. So the bigger reversal pattern played out, and I would say it is what it is, and it's a loss taken once again. So I documented that accordingly, and I mentioned over here for this particular trade, the lesson learned here: look at weekly candle to see and see if the move makes sense for the week to print the weekly bar or not, right? And the last three trades, one was closed in a win, another two in a loss. This was purely, I would say, news driven move. Unfortunately, I did not foresee this happening. In fact, I was in a big win for these trades, and it eventually turned into a loss, right? So it's kind of pretty sad. The last one, Euro USD, the moment I entered, immediately the news came out and I took a loss. But this too was supposed to be a very strong 1 to 2 risk to reward win, which sadly ended up as one loss, and the other I closed it in a very small profits. So AUD CAD, if I were to look at the graph, this is a screenshot of what happened upon entry, right? The market did push towards the downside, almost going towards my TP, but the 4 hours shifted and it was news driven and it was literally flying. I closed off another 2 trades that I was holding. So because the other 2 trades got just hit directly just like that, I decided to close my trades over here. I did, when the market was like down over here, I did move my stop loss into a break even over here. So that is why the stop loss is mentioned here. But as the market wicked up all the way up here and came back down, I said, you know what, I'm going to just close it out here and at least let this trade not be a loser, right? So I closed this and, well, guess what happened? This is the actual trade as of today, and the market did go all the way up to my stop loss area, but eventually kind of right now hit my TP. Unfortunately, I closed it over here. Could have let it run, but decision has been made, right? It did break above. I would have closed it here also. Looking at it breaking above, it broke again below over here. This is purely not in my hands, right? So the market literally fluctuated that bad. I took a small profits and I closed out this trade, and it is what it is. So that is AUD CAD, and I documented this accordingly. I mentioned over here, right, that results. I was in good profits before a sudden reversal that spiked all the way up. I closed out in small profits, checked, and it was core CPI news that came out that caused the unexpected volatility. News induced move, so move on. It is what it is. And same goes for this particular trade, USD CHF. So this trade, yeah, so this is the screenshot. Just look at it, right? So I was rallying all the way into profits and I was pretty confident that it's going to hit my TP, and then the market curved and the news came and literally dipped down. In fact, this particular trade, when it was already up here, I did move my stop loss into break even over here. So this was my stop loss, where I said, you know what, if some sort of thing suddenly happens at these, it will come and close me at a break even. I don't want my winning trade to go on a loss. But the volatility was really that high when the news came out. By the time the system could process me, right, the stop loss only got activated here. I still lost about 50% of the amount that I risked over here, despite the fact that setting my stop loss here at a break even. So I understand that this kind of slippage can definitely happen, has happened to me now, has happened to me in the previous trades that I've taken before this. And we've got to always account to this, and that's why risk management is key. A winning trade can always turn into a losing trade. If you see opportunity to take profit, take profit. These are the things that I'm learning as I go along. And if you're going to purely look at price action and technicals alone, fundamentals can always affect you. News driven situation can always affect you, and it is what it is. So this particular trade, which was supposed to be a break-even trade, unfortunately I took a loss over here as well. And I mentioned here, I was in good profits before a sudden reversal that spiked all the way down. It even went beyond my break-even, right, stop loss. Sorry, let me just correct this. Break-even stop loss, and took 50% of my stop loss. Checked, and it was core CPI news that came out that caused the unexpected volatility. News-induced move on. And sadly, the last trade as well, same thing, Euro USD. This was the trade. Where is Euro USD? So this Euro USD was the trade where I entered over here, and that's when the news came out. And unfortunately, this being a good trade ended up straight into stop loss. Like literally, this trade, like nothing to analyze over here. I entered here, supposed to go down 1 to 2.5 risk to reward. Beautiful trade with weekly sell, daily sell, and zoop, it just hit my stop loss. In fact, if I were to see this market, the stop loss, even if I set it slightly higher, it would have still hit my stop loss. And so far the market is going on towards the upside. Yeah, so I can't conclude anything for now, but yeah, that was the next trade that got hit as well. I just updated the trade as it is. I mentioned upon entry had a sudden reversal that spiked all the way up, hit my stop loss, checked, and it was core CPI news that came out. It caused the unexpected volatility. News induced move more on. So this last three trades, sadly, two of it were supposed to be winners and one of it supposed to be on a win as well. But I have to document what exactly happens so that I can learn from it. So it is what it is. So that concludes all the trade recaps and lessons learned from the last 15 trades, whereby 12 of it went into a loss and one break even, 2 wins. Should have been at least 4 to 5 wins over here. But it is what it is. Now I've already concluded 45 trades. I'm gonna keep trading, and I'm gonna do my usual capital upgrade. I added another $500 as I go along. Every 15 trades and so on, I keep adding some capital because I am learning to adapt, I would say, slowly for this particular portfolio, to be able to trade at a bigger amount, to be able to risk bigger amount, so that my mind can actually digest this kind of moves. And it's not just that, I want to build the journal in such a way that by the time it reaches 100 trades, 200 trades, 300 trades, I'm creating the profitable edge and I'm recording everything. I'm also risking a bigger amount every single trade, so I'll be more and more disciplined when I'm committing bigger amounts. So that's the whole goal of this entire journey, and I'm documenting all these things so that in the future anyone can come back and re-look at these charts, this YouTube channel, and they can do the same as well. They can grow the same way as well. Not financial advice, but if you keep doing with demo accounts, you will never get your emotions involved. You need to be able to risk an amount that is not too big that you cannot sleep at night, but at the same time not too small that you don't even care. And the best way to do it is something like this, which in my opinion, no financial advice, but something like this, not a financial advice. You do what makes sense to you. I'm doing this because this makes sense to me, and I'm trying my level best to document every single thing so that I can learn from it and so that I can improve. And in the future, hopefully this becomes a trading library, a trading journal that others can implement as well, and others can learn and improve as well. So that's about it, guys. Thank you so much for your time. And if you think that you want to learn from the previous lessons learned as well, don't forget to check out trade recaps, lesson learned from trade number 1 to 15, trade number 16 to 30 for doing this video. Thank you so much for your time, and have a good day. Take care.